now. Quickly go through the new and other business. Council committee appointment updates. We'll start with Councillor Robert. Services Board.
I did have a meeting. I wasn't able to get a hold of Mike there today, so I have no report.
No joint planning meeting. Lanark Highlands Public Library Board. Unfortunately, I was at County Council meeting last week. Greg sits on the board with me, and I checked with him, and it was relatively uneventful. Next one is the Youth Center, Councillor Kelso.
So they just had their Pride celebration, fun games, barbecue was successful, I guess. I didn't attend, sorry. And they're going to take a break now for the next 5 weeks. So we won't meet again now until after summer.
The Lanark District Museum Board, Councillor Close.
Yeah, well, as you can see, if you walk by, see the repairs are underway to the museum, so it is closed at the moment. And on the 17th, we had the fire presentation at the cemetery. It was very well attended. There was a lot of people there. It was very well received. So a good thing, and they had an auction and raised money for the museum, so it was a good day.
Thought it was neat seeing all the old timers there, many of whom I'm sure lived through the fire. And so now the Middleville Museum Board, Councillor Brink.
Middleville had a strawberry social last weekend. I was not in attendance, but the report back was I think they had about 135 people in attendance, and it was all funded through money that's a grant through the county, and so they made just over $900.
Mississippi Valley Conservation Authority.
We have not met, but through the municipal grapevine, it was indicated that the county is working on the agreement to purchase the portion of the KMP, and that it will be open to the snowmobile club this winter is the expectation.
The Arm Prior Library Board.
No, I don't have a report for that.
Recreation Advisory Committee, Councillor Clement.
Thank you. We had a great meeting last week. It was a really good working meeting. Lots of ideas came through, and we digested the survey results from the pickleball survey. So Chelsea and I will be collating all that information into next month's minutes.
Yep. And finally, the Municipal Grants Committee.
So just waiting for the budget to be approved so people can get their money.
We have a suggested motion that council committee appointment updates be received as information. That's moved by Councillor Summers, seconded by Councillor Brayton. All in favor? That's carried. We now have a presentation. Draft financial statements for the year ending 2021. Katie Hahn, audit partner with KPMG. I believe they're online. few of us. The Reeve and I went up to Robertson Lake Sunday. No, compared to other years, yeah.
I am, can you hear me? Perfect.
All here.
Great. So is the screen's gonna be up for everyone to see? Yeah. Okay, I think that might make sense. I can take my camera off now just to kind of introduce myself, but then I think it might work well if I could share my screen. That way we're all following along on the same page. That would work well. Right. Can everybody see me?
Yep. Yes.
Okay. All right, well, nice to virtually meet everybody, and I know you've had a long night, so we'll try to be as brief as we can. I will take my camera off in a second, as I mentioned, to share the screen, just to make sure the connection stays okay. So just give me 1 second here. So you should see my screen now. It should be that blue document. Is that sharing? Yeah. Perfect. All right. Am I good to jump into it? Yeah. All right, perfect. Well, it's been a long time coming, I will say. This is the 2021 financial statements, but very happy to be here to present, to be able to close that lid on 2021. And then I know we've already started to have those conversations about getting in to complete the 2022 field work as soon as September to be able to hopefully then get back on track for the 2023 fiscal year. What I will propose to do, since we are virtual, is run through the report at a pretty high level, and then be able to answer any additional questions either at the end of the presentation or certainly as we go through. Either or, whatever your preferences would be fine with myself. And then I believe we also have the in-camera session as well. Is that correct? Right. And so then we can pause, go into in-camera, and then after in-camera, come back and look for the motion to approve. So at a very high level, this is the audit highlights page. We'll go through each of these in more details, but really the highlight to take away here is that from a status perspective, we are substantially complete the audit. So when we had written up this document, we did have one item regarding receipt of the consultation with our Department of Personal Practice regarding the adjustment to landfill that we put through, which I'll speak to in a second. Although I got that back at the end of last week, so we're all good on that front. So really, all we're waiting to do is to have the conversation here tonight And then we'll get a few signatures from the team, and we'll be in a position to finalize the statements and, like I said, kind of close the lid on 2021. And then the rest of the items we'll go through in more detail. So from a significant changes to our audit plan, so 2021 would have been the first year as a KPMG audit. So previous to that, your external auditors were Allen and Partners, and then Allen Partners and KPMG merged in October 2021. So because of that transition, we were able to retain some of the key audit staff that had worked on your audit previously, and then as well combined with the KPMG team out of both the Kingston and Perth location, a bit of a combined effort there. As a result of it being a merger as opposed to a straight transition, it did make it a bit of a smoother process that way. But certainly anytime there is a transition in auditor, that first year is a relatively heavy lift. So we do have to, from a starting position, get a full sense of the internal control environment. We are completing a risk-based audit, so we take a full approach to that risk assessment material to make sure everything is as up to date and current with all the new standards, as well as the various different methodologies put in. So even though we were able to leverage some of the staff from the Allen Partners firm, it really did feel like a new audit from the sense of transitioning to that new methodology. In terms of a materiality standpoint, so materiality is an important audit concept. Materiality was set at $150,000, and that is approximately just under 1.9% of the prior, being the 2022 fiscal total expenses. How we come about with that number comes from Canadian auditing standards. So they provide us with some guidelines of how we plan and execute an audit, and those Canadian auditing standards tell us that for a not-for-profit or public sector organization like yourselves, we would use either revenue or expenses, but typically expenses as a base, and then anywhere from a 0.5 to a 3% range of that base. So you're kind of right in the middle there, which would be consistent with your peer group. So we were able to set that materiality. We were able to keep that materiality throughout the audit, and then as well, some of the other areas of audit focus. As I mentioned, it is a risk-based audit, so to the extent we go through the audit, we certainly have a heightened focus around revenue recognition, as well as around cutoff, around expenses to ensure then that the related payables, accruals, receivable balance sheet items are as they should be. So I know that was a lot of information, more than we usually get into, but just wanted to really highlight that because we are referring to the 2021 year, we did have to go through that external auditor transition, and then just highlighting that overall materiality figure. From a financial statement perspective, looking at your balance sheet or your statement of financial position here, overall, a relatively strong cash position. So you can see over that $12 million mark. The taxes receivable, just over $1 million, a slight improvement over last year. The ministry does put out some financial indicators. Typically, they like to see taxes receivable as a percentage of the total levy to be around the 10 upwards of 15% mark. You're just around the 20% mark, which is a little bit on the high end. However, noting that 2021 was right in the midst of the pandemic as well. Overall, a lot of municipalities did get up to that 20% range. And then certainly looking forward into the 2022-2023 fiscal years, having a little bit more of a focus on bringing that number back to within that 10 to 15% range that the ministry likes to see. From an accounts receivable position, it's gone up there, that $500,000 mark versus last year. The reason for that being that in 2021, due to some of the turnover in staff, some of the HST returns had not been filed on time. So about $400,000 of that balance relates to HST receivables. So certainly nothing from a collection risk that's of concern there. And then in the liabilities section, we have the accounts payable and accrued liabilities. That's just really timing of when those payments are coming in and out. And then we have the approved landfill closure and post-closure. So this was a big item in the audit this year. That $2 million number would be a new number based on historical financial statements if you had them up beside you. The reason for that is because as part of the transition to KPMG as auditors, we were required to get updated landfill closure assessments from the engineers. Out of those new reports that came forward, the last ones had been done quite a number of years ago. So just with increased costs, increased inflation, all that good stuff, the costs themselves had a pretty substantial increase. But then the other item was that the calculation over the post-closure monitoring period had also updated. So the Ministry of the Environment does put out a requirement to monitor post-closure for 25 years at a minimum. So if there's no contamination, it could be longer than 25 years, but 25 years is the minimum. So between the extension of the post-closure over that 25-year period, as well as the increases in cost, that landfill number has increased about 1.5 million versus what it would have been, what you would have been used to seeing in the past. So that certainly took up, I would say, quite a bit of audit time going back and getting those engineering assessments and environmental assessments coming through, and then quite a big number. It is just as an overall comment to council, it is what we would call a non-cash item, meaning that it's not anything you're going to have to cash outlay, in the short-term period. It is also an estimate, so based on assumptions, the overall costs incurred, rates of contamination, inflation, discount rates, that number can vary quite a bit. So it's certainly something that we keep our eye on each year, and then on the go-forward basis, every 3 to 5 years, we get those updated assessments to make sure that that number stays as current as it needs to be. Then after that, the other item in the financial liabilities that's changed a little bit year over year is that deferred revenue from the obligatory reserves. Those obligatory reserves are comprised mainly of the gas tax that's been received but not yet spent, as well as some development charges that will have been received but not yet spent. So that change is just really the difference between receiving the gas tax for the year and not having expanded it yet. So when that gets spent in future years, we'll see that balance come down. And then the non-financial assets, that's always comprised of your capital assets, your inventory, your prepaids. Capital assets always being a function of amortization taken in the year, which decreases that number, offset by any additions, which would increase it. Inventory relatively consistent. And then new this year was the prepaid expenses, and that relates to some prepaid insurance, specifically around the fire department there. This next page just shows a bit of a graphical representation of where your investment in capital assets is. We like to pull this up really just to highlight the various different types of infrastructure, quite aligned with your peer group, so nothing out of the ordinary here. And then from a total reserve perspective, this is a new slide that we started putting in the 2021 fiscal year, really just to highlight that reserves are becoming an important financial governance topic, sustainability at the table of council, mainly as a result of multiple things, but mainly as a result of asset management planning that has came into the 2021 year. So the ministry does set out, again, a couple indicators to help guide reserve balances. So they'd like to see at least a 20% of operating expenses to be in operating reserves, and then any capital reserves to be looked at in comparison to those asset management plans over the 5 to 10 year period there. Oops. From a income statement or statement of operations perspective here, overall revenue for the year at 8.2 million, relatively consistent with the prior year, although a few items to note. User charges, it's gone down a little bit versus the prior year, and that's because in the 2022 year, there were a few one-time items. So there was some sale of assets. There was also a one-time planning fee that was received. So those didn't reoccur in the current year. Government grants, 2021 had some of the COVID safe restart funding come in from the government. So that would be the reason from the increase there. Contribution from developers, that's the DC charges that come in. So that kind of goes hand in hand with the gas tax. So if there's a year where you utilize more of the gas tax funds, you might utilize less of those DC charges, with any of the unspent funds staying over net obligatory reserve we saw on the balance sheet. And then really all the other items fairly consistent, so I won't go through them in detail. And then getting down to the expenses, again, relatively consistent. If you've had a chance to look at the statement, there is a note 12, which breaks down the expenses by category, so by salaries, materials, as opposed to department. And then overall, an overall deficit for the year about 133,000. And then below there, that's where we see the update to that landfill item. So we can see the 2022 impact was at 1.5 million, and then 2021 just over that $1.1 million number there. And then this next page, again, just a bit of a graphical representation of the operating expenses. Again, very similar with the peer group, materials and salaries and wages being the largest expenses. And then the breakdown of this detail is in note 12 of the statements. So then back to a few of the audit concepts. So one of the requirements that we are required to put into each and every audit in Canada, not unique to your individual municipality. Those Canadian auditing standards again require this item to be in each audit, and that is some specific procedures designed to test the fraud risk management override of controls. So this is just a highlight to say we are required to do this work. We have incorporated it into the audit at a very high level. We get the full GL for the year. We run it through a software program that's based on some high risk criteria, and it generates a sample. So we were able to complete that test, and we didn't have any findings on that test. So everything looked good on that front. And then this next slide speaks to control deficiency. So one of the important items throughout the audit is for us to gain a thorough understanding of the internal control environment. So we've gone ahead, we've done that work, and then we have that separate letter that we'll speak to in a few minutes around that. From a audit adjustment perspective, so when we come through to do the audit, to the extent we have any differences over our posting threshold, which is a calculation of that overall materiality number. So it's just a straight 5% of materiality being that $9,000 mark. To the extent we found any differences over 9,000, that's when we have the conversations to say, should we be booking entries, or will we leave it as an uncorrected item? We did leave 3 items as uncorrected, meaning that these were differences that we had found in the audit, but because of various reasons, mainly being the difference coming from differences between the listing and the GL, and not being overly certain which one was the correct balance, we decided to leave these as uncorrected items and investigate them further in the next year. As long as the accumulation of these items does not approach that overall materiality number of 180,000, we're able to continue on with our clean opinion on the financial statements. So we're happy to have just noted these as differences and to be looked into in 2022. They're well below that overall materiality threshold, so still able to move forward with that clean opinion. And then there were some other items that were larger dollar items that we did put through as corrections, but they've already been incorporated into the statement. And then the last few pages here around significant accounting policies and practices. So the good news was that for 2021, there were no new auditing standards or accounting standards that needed to be incorporated. What we have flagged here is that in fiscal 2023, there will be a asset retirement obligation standard that will be coming into play. So again, at a very high level, asset retirement obligations are any current legal obligation to remediate an asset or return it to its future state. The standard specifically addresses asbestos in buildings. So that's a standard that we currently just work through on the hospital and healthcare audits that have March 2023 year ends. School boards are coming up with August 2023 year ends, and then the municipalities with their December 2023 ends will be next. So the ministry has started to provide various different templates to help with this transition, but it's something that we'll be making sure to speak with management on to make sure that we have appropriate scoping to be able to put this in for when we get to the 2023 audit. And then after that, we're into the appendices, which I won't go through in detail. They're more informational in nature, but happy to take any questions if there are any.
Thank you very much. Do we have any questions? Councillor Roberts.
Thank you for that, Kate. Just one thing, I'm following along as best I can. On the materiality, you have two values beginning on the page, as you say, was set at 150,000, and then on the uncorrected audit adjustments, you have it at 180,000. Is that just a typo, or which one is correct?
That is a typo, and I have the file right in front of me, so I can confirm it is the $150,000 number. So that means that this page here, this page is the incorrect page. That should be 150, and that should be 7,000. So that's a good catch. I will make that update. Thank you for that.
Thank you. Any further commentary or questions? I just thought I'd say that I had to smile when I saw this on the agenda, because think back to the last election campaign, and some of the candidates were calling for an audit. Of course, we do one every year, and this is it. So thank you very much for that. Not seeing any more commentary, I do have a suggested motion that presentation by Katie Mahan, audit partner KPMG LLP, the draft financial statements for the year ending December 31st, 2021, dated June 27th, 2023, be accepted as information.
Just one
Do I have a mover for that?
Just one more
comment from Councillor Roberts?
Just one more thing, Kate. On the you said there was a couple of things that were in a different header or a different file. I didn't get those.
So I think those are the items we're gonna speak about in camera.
Oh, okay, I'm sorry.
Okay, so we have the motion moved by Councillor Kelso, seconded by Councillor Summers. All in favor? That's carried. Thank you. Now have a closed session, draft financial statements, management letter. We have a suggested motion. The council move into closed session.
8:49.
8:49. Do we have a mover for that? Councillor Close, seconded by Councillor Summers. All in favor? That's carried.
Appreciate your time tonight.
Thank you.
Thank you.
Thank you.
And I have a suggested motion that the committee of the whole meeting adjourn at 9:17. Going for 9:17.
I'll change your rate.
Moved by the Reeves, seconded by the Genie, all in favor?